Uh-oh. Watch your mouth. We're live. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? Good. You know how weird it is to talk to a camera all day, right? I can't see you. I can't hear you. I don't know. I'm just here talking. That's why I talk fast sometimes, and we're going to do that here today because we got a lot to talk about for first day of the new week, I guess. I don't know. Hey, we're financial advisors here at Jazz Wealth. This is Louie. He'll be joining us today, working with us on the show. We call it the Closing Beat. And hope you'll check us out, jazzwealth.com. We are actually starting to invite members from our wait list. Sorry, you had to wait. That wasn't a gimmick. We weren't trying to do that. We were building out our technology here for you, so you have something cool to look at when you come in. So if you've been wanting to join us, you can join the wait list, and we'll likely be inviting you here shortly and then opening back up to the general public. Long overdue. Anyways, we also do weekly classes. We call them Wine and Wealth. And the last week's class, we talked about how long does it take to make a profit. I actually pointed that out in the Notes from Jazz email. It was open to research members as well, if you'd like to check that out. It is in there for you. And of course, that's one of the fun classes we like to do. Also, you may see a new face around here. His name is Eric. He's our new advisor, and he's actually really great. So everybody should probably love him. But if you don't love him, then you know that's what I'm here for. So you'll be seeing him a little bit more here and there. All right. As far as the stock market goes, off to the right-hand side of your page, what's the deal? The chat's all quiet today, man. We need to get them fired up, man. That's how we get views. You know, we get more suggestions. YouTube likes to see the comments, man. I need to see some comments. What can we do to get them fired up? Hey, I tell you what, actually, your passport, you can now mark your gender as X. That'll get some of you fired up. There you go. I know some of you in there. All right. As far as the markets go here today, let's take a look. Off to the right-hand side of your screen, well, you can see me, but you see the stock market in the middle of the screen there, and we got a little bit of a reversal after last week's pullback off of those highs. The market's starting off the week with some optimism, and nothing wrong with that. There's actually a lot to look at today. I would say that inside of the S&P, the big leaders today, I wish there was a way I could show you, but the big leaders today were the big cap stocks, your mega cap stocks, your Apple, right? Your $2 trillion names. That's what held the market up, because if we look at I'll use the SPY, and we'll go over here, we'll do the 5-minute chart. If you look at the performance of the market, right when it opened, you get your immediate volume of all that weekend demand, and then that's it. No real pullback. Why was there no real pullback today? Because the big mega super cap stocks did not pull back at all. Microsoft closing at its highs of the day. Apple also closing at the highs of the day. Nvidia closing darn near its highs of the day. Alphabet, very close to closing at highs of the day. Amazon closing at highs of the day. Scam likely, man. Tesla, well, that Tesla had a good day as well, closing at highs of the day. So that momentum all day just held, right? And there was nobody willing to take profits on those. The problem is, look around the rest of the market. I don't know, I'm going to pick random names here. We got Cigna, CME Group. Oh no, these are all lower. Baxter, right? Starbucks even was a little lower. Yeah, well, that was a news-driven stock there. Wells Fargo, some of the banking stocks were lower on the day. Edwards Life Sciences, if you're going to get into medical device, medical sort of healthcare space there. Raytheon, right? If you look at the broad market, there was not a lot good out there. Southern Co. even pulled back. A lot of energy names kind of pulled back there. Dollar Tree, let's do some retail. All that pulled back. But no, you have the big tech names moving higher and staying strong. Netflix was higher on the day. Of course, Twitter and some of the others like Salesforce, they were all strong. And that is so much weight of the market in just those 35 names or so that's enough to hold the markets up all day. And that's exactly what happened today. So you're going to need to see more participation from the rest of the stock market, because a small amount of stocks cannot hold the markets higher and higher forever. They can send it on a tear, absolutely, but they can't continue to do the heavy lifting. And so if you look around the market today, nobody was really working besides those big, heavily weighted stocks there. Also, let's talk about something real quick. So did you know that in the last quarter, this first quarter of the year, the stock market was down more than 10% and then up more than 10%? Is that odd, right? You guys that watch, you know to ask that question if it's odd. Actually, the stock market has only done that 11 other times in history, where in one quarter it fell 10% and somehow rallied 10%, or at least 10%, right? And so I wanted to look at going forward. What do we expect? Is that good news? Is that bad news? And so we're going to actually take a look here. We've got some data. So in a quarter where the stock market falls at least 10%, then rallies at least 10%. Here's every other time that's happened. The average gain in the quarter after was 11.3%. So in 2020 we had that. The gain after in the next quarter was 20%. That was a big one. 1.9, 15.2, etc. It was positive every single time except this one time in 2008, and you might be able to guess why. Other than that, when the market falls at least 10%, then rallies at least 10%, it's a good sign going forward, right? It gets people a little bit excited. If you look a little bit further and you say, well, I'm not a short-term investor. I want to know, should I use dips to buy on the way down or should I just run away? Here is 1 year later. It's the same data. There's only 11 of them. In any quarter where the stock market fell 10%, then rallied 10%, here is the forward 1 year performance. So going forward over 12 months. The average performance is 29.75%. That's nothing to sneeze at. And 2020, a year later, we had 53%, 14. You can see through the list there. The bottom line being that if you're someone who is looking to say, a dip in the stock market is exciting for me and I don't want to run away from it, I want to use that as an advantage, well, now you know. Maybe a little advantage there thanks to the volatility that we all had to deal with in the first quarter. All right, that's what we have for that one. Let me go over here and take a look. You got the NASDAQ as the best performer today. Gee, I wonder why. Microsoft, Apple, Alphabet, Amazon, Tesla, Facebook, right? All these stocks, Intuit, that had really good days and are a large portion of the NASDAQ did well. We're back above the 200-day moving average. The Dow was kind of mixed. It did finish positive on the day, but not quite as good as the rest. And the Russell also trying to make up its mind whether it wants to break seriously out of this high or if it's going to be a fake out. We'll have to wait until tomorrow to find out. If you look around the commodities, metals, all that stuff, you got oil up 4% on the day, right smack off the 50-day moving average. And you want to expect more volatility there still in oil, obviously wars and things happening. It is going to be normal. You also have the Strategic Petroleum Reserve happening and everything, release happening. And we talked about that last week to identify what that is. If you look at the price of gold, chopped land, man, chopped land. This is normal for gold. This is not crazy, right? So gold tends to sort of hover around and play with you for a little bit, then start something, right? So right now we're back into that mix where gold is saying, I don't know what I want to do. I'm just going to wait and then shock you one day and there'll be a reason to move higher. So that's what's going on there. What else do I have for you? Yeah, I think that's it. Okay, so if we look on over at the sectors for the day, and I'm going to look at sector performance in general just to give you an overview, not of today, but how things have been going. Communication services remains in a downtrend. It is the only sector that is currently trying to break out of a downtrend, but it is the only sector in the S&P that is in a downtrend. Utilities, oh, come on now. Utilities, one sector that's in an uptrend. Consumer staples now in an uptrend, and energy stocks have been in an uptrend. Those are the only three sectors in an uptrend. So you got three in an uptrend, one in a downtrend. Everything else is working out either of a neutral zone or trying to bounce off of lows there. What's interesting is year to date, you might have, it's easy to guess now. Energy is the best performer, about 39% gains so far for the year, but real estate has been the best performer right there over the last 5 days. About 4.5% gain over the last 5 days, followed by utilities, right? The worst performer over the last 5 days, if you're looking for pullbacks, has been financials, which there's a lot of interesting stocks in the financial space that are currently pulling back. And in the financial space, I'll point out that only half of the stocks are over their 50-day moving average. That's the blue line here if you're following along. So 50% are above, 50% are below. That tells you that most of them are chopping around it at the moment. There are some that have pulled back a little bit sharper, maybe like CME is working on breaking and pulling back through it. Citigroup, obviously well below its 50-day, so that's one of them there. And then there are others which are just below, right? So like Wells Fargo, a little bit of an extended move there if you're trying to follow that. Bank of America, working on it, right? It's under, but it's working on it, so something to look at there. In terms of dividend yields, we now stand with energy. I'll use the XLE as the current highest yielding sector of the stock market at 3.1%. Then after that, you have utilities, which is usually near the top, 2.8%, and it doesn't get any better from there. You've got real estate, 2.5%. You've got consumer staples at 2.4%, and then you drop down into the 1% category. The worst area for dividend yield right now is consumer discretionary stocks, only at 0.7%. Now, in the energy space, you have a handful of overbought stocks. VLO is one of them. Hess is another one there. These are the most overbought stocks in the sector there. And you also have Kinder Morgan. Those would be the top 3 most overbought stocks. There are no oversold stocks in the energy space right now, and that is obviously because everything's going really well for them. What else do we have? Oh, by the way, technology stocks using the XLK, they currently make up about 28, almost just over 28% of the S&P 500. So inside the tech sector, you have Apple, right? Microsoft, names like that, and they make up almost a third of the entire market. So if those stocks, like they did today, have a great day and everything else does nothing, that's going to move the market. So that's what you have there. I hope you find that interesting. All right, in our office trades here today, off to sort of a quick start in terms of the action and things that we decided to do. Let me go like this because that is a little bit weird, right? Let's go back over here. So Cody had the idea to play Fitboy, F-I-T-B is a ticker symbol, sold the $40 puts on that one as kind of a fun play. I had the bright idea to go against Twitter and sell the $55 calls due to the volatility out there. Very simple play, nothing magical about it. Played CME to the upside there as well. We got Starbucks. We're trying again. We sold a ratio spread before. It moved in our favor fast, so we made the small profit on that one. We've now come back and we started by selling the $80 puts. We will probably expand that play there. We rolled forward our Restoration Hardware. We've now collected, I believe, $26. Let's be honest about it. What is it? $23 in total credit collected there for selling the $350 puts. So we're still actually in really good shape given how much that's moved. Las Vegas Sands, we decided to close out 2 of our position there. So we basically that's where that stands. It hasn't really moved much, so there's not much to work with there. And we tried to roll forward our United Airlines. That order did not go through. We will address that tomorrow. Actually, we got 1. We had apparently 4 contracts. We rolled 1 of them forward. That's a bit messy. So we will deal with that. But again, a lot to do because the market is giving more opportunity to do a lot of things, of course. So I'll put that off to the side. And let's work on new highs and lows for the day. You see Newmont? Look at that crazy rally in Newmont. So gold mining stock, that hit new highs and has started to pull back. It's extended, so be very careful there if you're going to play along. Walmart did the same, broke out to new highs, started to pull back a little. I personally would like to see it pull back first. Citigroup did hit new lows and then reverse course, almost went positive by 1% on the day, not complaining about that. Walgreens is now starting to get extended. This would be one that if anybody's paying attention on the office trades, I'd be interested in trying something unique on this one. Maybe we could do the same ratio spread for those of you that have been wanting to learn about that, or just a simple covered call. Maybe we'll have fun with that because it's a lower price stock. Happy to play with that if we can teach you as well. U.S. Bank hit new lows, and there's a lot of these in financials that they're not hitting new lows like U.S. Bank, but they're hitting new recent lows. All right, so if you like pullback stocks, I'd continue to say that the financials are a place to go look if you're a stock picker. You stock pickers out there having a blast right now. Let's do the stocks in the news today. Twitter. You probably heard Elon Musk, what is he about? 10% of the company? 9.2% of the company. He has bought in shares after posting his poll, I believe it was last week, saying, hey, this, is supposed to be the town hall for free speech, and they're not doing a good thing. What should we do about it? Turns out he was buying shares and just teasing you a little bit. So that had a huge move today. So did social media stocks in general. Starbucks, the new CEO who was the former CEO, and then before that was also the former CEO, Howard Schultz. He has decided that they're going to stop the stock buyback plan where they're spending money to buy back their shares. They're done with that. They're going to invest more in their people and in their stores, as they say, which is very typical for Howard Schultz. That's been his sort of MO when he becomes the CEO over and over again. Roku in the news here. They extended their deal with Amazon to allow that to keep happening on the TVs, which is a good thing. It was up 7%. Is this enough to get the tide to change for old Roku? Is that the end of the sort of start of the year weakness? I don't know. But I know I got a question on that a lot. And Tesla. even though I think they missed their deliveries, it was less than expected, but more than they expected. 305,000 cars for last quarter, or the first quarter, versus 312,000 expected, and the stock is higher. That tends to happen there. It takes a lot to knock that thing down these days. Other than that, Micron, yeah, that's also, I skipped it. So Micron in the news, it didn't really move a whole lot here today, but Barron's was pretty publicly bullish on Barron's there. They said that it should trade at a much higher valuation than it currently is trading at. It was good for a 2% bounce, you know. They got a little something out of it. Tomorrow we have, what do we have? Not much. You got a Fed president speaking, and that's about it. Yeah, I'll take your questions if you happen to have any. Otherwise, we will get back to work, do what we do here, and help you out. All right. So let's go over here real quick. Okay. Questions. The Fed say rates up. Oh yeah, well, that's still happening. Bonds were a little bit lower today, which means yields were a touch higher, but this is now their new chop zone here, right? So it's hard to say that this would be worthwhile for a bounce, which means rates would come back down. That's a tough one to be in for the moment. I like an extended move in bonds, like we played TLT last week in our office trade segment, but I don't know. April typically positive. Yeah, they say April's a good month, so I hear. He's holding Twitter at 46. He sold half at 51. All right. That's right. Yeah. Oh, good for you. Yeah, you like to see that news there. So you got half out at 51. You still got a good cost in there. You're just protecting, right? So how often does Twitter give you a move like this, right? It's odd. 27% in one day. You have to go back a little bit to kind of get back into, you know, when they were smaller. So now you're protecting. You got to have a number. You say, well, if it does pull back, I don't care. I'm going to lock in X dollars in profit or some number, and I'm going to walk away. And then I can always come back, right? Maybe I'll have another trade. But that's what I would do. Look to lock in profits there. Caleb, looking at Walmart here for Caleb. So Caleb says, it sold the 150 calls that expire in May, and your thoughts, should I take the loss or wait it out? You sold the calls naked. So I wouldn't do anything with it, no. You know, it can't be that far against you unless you sold those calls when the stock was like 145 or something, which probably wouldn't have been for a lot of money. So I think you wait it out. Yep. Sheesh says, at this rate, we'll be at all-time highs by month end. Not even, right? It's early in the month at this pace, at the pace the market had been going. We talked about that last week. That's awfully bullish for a lot of weird stuff going on out there. You like CVX to 175? Boy, I hope not, man. I mean, I'm rooting for you, bud. But just for like, you know, the next week, if it could stay right here, I'd be happy. After that, 175 all day. Have at it. But we're short in our office trades, and we're basically right there. It's a little bit bigger of a dollar position. So I'm hoping, just give me a little bit of a pullback first, then you can have your 175. Yep. You still expect a lot of volatility moving forward? Yeah, what would I have to say that there will not be volatility? There's nothing out there. So, I mean, even the ending of a war, come on. We got a lot going on this year. I think it's a year of a little bit more heightened volatility. How bad is the market overbought? In the real short term, yes, very much overbought. I give you that. It's extended overall. If you're looking out, you know, months now, yeah, a little pullback from here wouldn't be a big deal. But in the ultra short term, we were overbought and did start our little pullback there. Yep. What would you say about a play in lithium like Piedmont? No problem with that. I know that's, you got to be careful with where it's priced, because it's, a lot of people have already had that idea. So be careful what you pay, but no problem. Yeah. The Defense Production Act thoughts with respect to EVs. I think in general, EVs are going to be more competitive. It's not just obviously going to be Tesla from here on out. It sucks that a lot of the other companies are like, yeah, 2023, about the end of the year, we'll have a car ready. People are only willing to reserve those cars now because they got the money, right? What happens when the money supply starts to tighten up, like the Fed has already said they're going to do? I think you had, like I had a reservation on this weird like three-wheeled battery-powered something or other. It's like a little go-kart car looking thing. I've had a reservation on this thing for like 3 years now, and they're still like maybe 2025 or whatever. I'm pretty sure I've just kind of lost that money. But people will get upset and lose their patience in terms of reservations if money tightens up. And that's kind of where we're headed there. Yep. Doc says, agree with the bank's discount, also solid deals and consumer discretionary. Well, yeah. Your home builders, cheapest stocks in the market at the moment, still remain the cheapest stocks, cheapest industry in the market. But hopefully financials will give us a little bit more. Be cool. Guys have their sell point at 175. Interesting. I wonder why they chose that. Just because it did hit 175, right? Oh, no. No, yeah. I see what you're saying. So they missed it by 24 cents. So they're looking for 175. I gotcha. Okay. So what gets back up there, they're out. Yeah, I know. Making moves on small cap funds soon. Yep, that's next up. And we will do a class on that for sure. I like doing those classes, so no problems there. What do we think about Evergrande? You think they were actually going to default? No idea. It hasn't been something that I've followed. It was fun to watch on the news for a little bit, but I have not followed it. Adding a little more Disney to your holdings. Cool. I won't tell you about the exchange I had with my sister-in-law over the weekend trying to diss Disney. I wasn't having it. I mean, I don't agree with the CEO. I don't like what they're doing. I think they should stay out of a lot of stuff and just go, you know, be in the small world and it's happy after all. But don't diss Disney. The CEO is not representative of the company as a whole. He represents the company, I get that, but don't go dissing my Disney. Mickey Mouse would just picture Mickey Mouse like just jumping up and fighting her. All right, I'm gonna wrap it up and get out of here before I get started. Appreciate you guys hanging out with us here today. We'll be back tomorrow to do it all over again, of course, and enjoy the rest of your day. See you.